Hi, I'm Jata, your realtor. Given current industry news, we are all wondering what are interest rates going to do? Are they going up? How far up? Or are they going to stay the same? And if they stay the same, for how long? Join me as we talk to our industry expert, Amber Gray, about interest rates. Hey Amber, good catching up
Hey
with you.
Donna, how are you?
I'm doing well. So I wanted to catch up with you because I'm sure you know, you've seen in the news that rates might be increasing. And so for a layman like me, from what I understand, the feds with increasing their rates, they meet 8 times a year. Four of those times they said they will discuss increasing rates. If I'm guessing, that would be January, May, September, and November that may happen. However, I didn't want customers to get too alarmed that rates might skyrocket, right? Because as you know, that's the cost to the banks getting those loans. And so, of course, with any business, there will be a pass through where they'll pass on those fees to the customers, but it may not be as crazy as what people are thinking. So I just wanted to talk with you to kind of work through what does the increase in the rates mean? Because last year we were in the twos, now we're looking at conventional, maybe 3.5 for FHA and VA. We may be at that 3% mark. So, what should a customer or first-time buyer know if they're looking to purchase a home?
So the first thing is a lot of the reason for the rate increase is attributed to the new Omicron variant.
Okay.
So we've seen an increase from last year to this year because the feds are worried about what the virus is going to do. There hasn't been much talk about shutting back down. So
Okay.
I think that is also attributing to the increase and why rates are going back up. In addition, there was some Fed bonds that were purchased. I think that they are now considering ending that program in early March and April.
Okay.
So, of course, like you say, that those costs may be funneled through to the banks. As far as consumers or buyers new in the market and or refinancing, they shouldn't have too much concern as long as they keep their current debt paid and they make all their on timely monthly payments for their bills,
Okay.
keep a pretty decent credit score. I try to tell my clients at least a 620 or better. Um, FICO score helps to get them in a position to purchase. We can go as low as 580. And ultimately, of course, the lower the score, the difference in your interest rate.
Okay.
But of course, there's always an option of buying down. If you want to achieve a lower interest rate, you can always pay for a lower cost on the interest rate.
Okay. Can you expound on that a little bit? What does that mean when buying down the interest rate?
Sure. So, as far as, say, for instance, you have a 620 credit score currently, right? And I call you and say, hey, Jada, I'm looking at interest rates for your new home. I see that today's par rate, which is the industry standard for someone with your credit profile, and
Okay.
it's at no cost. The par rate today is 3%. And you say, well, 3% seems a little high, Amber. Is there anything lower than that? And I can look at our rate sheet that we get, and we get those pretty frequently throughout the day because rates change periodically based on the consumer price index and inflation in the market.
Okay.
So I can say, oh, I do see a 2.5 interest rate, but it's going to cost you $1,000 for that rate. You can say, hey, well, I have an additional $1,000. I would like to apply that to get the lower interest rate. And
Okay.
of course, yeah, that's considered buying it down.
Awesome. So last question for you for those first-time home buyers. So you hear about the big three all the time, conventional, FHA, VA loans. There are some others out there such as the jumbo loans, but just taking those three, what
Mhm.
should the first-time home buyer know? What should they do? What are the differences between them?
So VA is strictly for military.
Okay.
So anyone that's ex-military, current military, if they meet certain criteria, they can qualify for a VA home mortgage. As far as FHA, I always advise my clients who are anywhere between the 580 to 620 range. maybe even potentially 640. FHA may be a better option for them as far as interest rates and the cost of mortgage insurance. It may come out to be lower than that of a conventional loan.
Okay.
As far as clients over a 680, at the lowest, I would say for a conventional mortgage, we could probably go down to 640. But ultimately, I think the rate is better if you have a 680 or higher credit score to go with a conventional mortgage.
Okay.
And FHA requires 3.5% down. Conventional is 3%. The lowest I've seen is 3% down. And VA is 100% financing. So you don't have to come to the table with down payment funds if you have a VA mortgage.
Thanks for shedding some light on that. So, from what it sounds like, we're not in Armageddon yet. If folks
No,
still want to go out and purchase a home, this is
absolutely.
still a good time. So, of course, I always suggest purchasing sooner rather than later because inevitably rates will go up.
Absolutely.
All
Yep.
right, cool. Well, thank you for your time today. It's been great catching up with you. You have
Yes.
Amber Gray, one of my favorite loan officers. Thank you, Amber.
No problem. Thanks, Jada.
All right, talk to you later.
Bye.